Most people think you need a ton of money or multiple properties to start investing in real estate. But in reality, most people we work with in Austin start the same way, with just one home. And what they do next is actually what builds wealth. Hi, I'm Steph Douglas, broker and CEO of Open House Austin. I own multiple properties here in Austin, and we've helped hundreds of people not just buy homes, but use them as a tool to build long-term wealth. If you're trying to figure out how to get started in real estate, we're going to talk about the one strategy my team comes to over and over again. The strategy that has helped myself and hundreds of clients realistically invest in real estate. Plus, a few bonus tips that can get you owning multiple doors even quicker. Our favorite strategy is what we at Open House call BLRB. Buy, live, rent, buy again. If you understand how this works, it can completely change how you look at buying your first home. Because instead of asking, could this be my forever home? You start asking, could this be my first investment? But what does that actually look like? You buy your first property. Likely it's not perfect and it's not at the top of the budget, but there's potential. Then you live in it, usually for a couple years. During that time, you're learning about the market, building equity, ideally making a few smart updates, nothing crazy, but something that will add value. This is where most people stop. And few go from homeowner to real estate investor, because instead of selling, you rent it out. Now you have an income producing property, and from there, you do it again. Buy, live, rent, buy again. BLRB. This is how people build a portfolio without needing to be investors on day one. And this isn't a theory. We've seen this play out over and over again with clients here in Austin. I bought my first home when I was 24. Wasn't perfect, was not my forever home, but it was good for now. Lived in it for 2 years. Then I rented it out with a little cash flow and bought again. Made some improvements on that house, really built some equity, built some savings, and 2 years later, I did it again. I've done that 5 times over the past 10 years, which meant I slowly built up a portfolio of 5 high-quality updated properties. Because the biggest shift here isn't financial, it's mental. You stop thinking like a buyer and you start thinking like an investor. Now, there are a couple of ways people can do this even faster. One of them is house hacking, which basically means using your home to offset your living expenses. This could look like renting an extra bedroom, buying a duplex, living in one side, renting the other, or even adding an extra unit later on. And I personally have used all of these strategies to supercharge my savings so that I could buy even sooner. The goal here is simple. Reduce how much you're paying to live or eliminate it entirely. The more you're in the industry, the more you realize that smart investors are not paying their own mortgage. And when you do that, it becomes a lot easier to save, reinvest, and buy again. Before we get into the next strategy, if you're in Austin and you're trying to figure out how this could work for you, we walk through the entire process in our How to Buy a House workshop. Use the code WORKSHOP to get a ticket for free. The link is in our description. Now, another option we're seeing a lot of, especially in Austin, is buying with friends. I know this can sound risky at first, but when it's structured correctly with clear agreements, aligned goals, and the right property, it can actually be a really effective way to get into the market sooner. Buying with friends can offer lower individual cost, shared responsibility, while still building equity. Now let's zoom out for a second because this is where people get stuck. They think, I'll invest later. But what people don't realize is that their primary residence is actually the easiest entry point into investing. When you're buying your primary residence, the house you're going to move into, you often have better loan terms, lower down payment options, and better interest rates. Plus, in Texas, you can take advantage of the homestead tax exemption, but you only get this on your primary residence. So the question isn't, how do I become a real estate investor? It's, how do I use my first home to start building wealth? But if there's one part that matters most, it's this. This process only works if you buy the right property, not just something you love, something that will rent well later, something within a strong location, and something with upside. Because a bad buy at the beginning makes this whole strategy harder, but a smart buy, that's what makes everything else possible. So no, you don't need 5 properties to get started. You just need 1, and then plan what happens after. Buy, live, rent, buy again, BLRB.